I actually think it's quite a good message because we did have this view of the Chinese policymaker as the superhero that could defy markets. And I think a bit of humility is actually a good thing in policymakers.
So when we get the data today and with the Chinese market reopen, what are you expecting today?
Yeah, so we've got the trade data coming out, and I think the numbers to look at are the import numbers. Now, I was looking through the survey. There's quite a wide range of views on imports. But the sort of average survey actually seems to be imports up a little bit in January. Now, remember last year for the full year, imports were down 14%. So I think if there's evidence in the trade data that demand is not contracting as much as we'd seen last year, that might be seen as encouraging. We did have the Caxton PMI moving up, and the services PMI moved up from 50.4 to 52. So that was quite encouraging. So the sentiment around China, obviously in January, is incredibly bearish. Right. I mean, partly because of the way we started with the first trading day. And I think there's an opportunity here where sentiment just gets a little bit less bearish. You know, I don't think we're going to resolve issues like the renminbi, such as what's going on in the Chinese economy. Right. But you tend to oscillate between being a little bit too optimistic to a little bit too pessimistic. And I think we've definitely hit the pessimistic view, just as we had in developed markets. Right. Where we've had this extraordinary decline in bank share prices.
Do you think there's been a little bit too much press, a little bit too much airtime given to people harping on about the negatives in China? Last week, anybody who had that sound clip from Kyle Bass played it again and again and again and again. And I'll bet you that he's probably immortal too, just like a Chinese central banker. And he's got skin in the game. He's got, you know, positions that he needs to come true. I mean, if you're shorting the market, you want things to go wrong. And there was the media just soaking it up with the microphone on and repeating it again and again ad nauseum. I mean, I just kind of wonder if there's something really, if it's just more talked about than reality.
Yeah, so what they're referring to is, you know, fundamental facts. There is too much debt in China. Nominal GDP growth is slowing down rapidly. The corporate sector has too much capacity in many industries. Profits have been falling. You know, these are all important negatives. But there's a constance to them in terms of that was the situation last year. And last year, remember that Chinese equities actually did very well at the beginning of the year and obviously had a very large correction in the second half of the year. So I think you should have your fundamental framework, but understand that market sentiment can oscillate around that framework.
Any anticipation how equities in China are going to be performing today?
Gosh, that's a great question. Okay, if I have to put money on it, I think they go up today. So we were looking at local funds in China. Cash positions are quite high. You know, the data has been quite encouraging over the last week or so, particularly the PMI data. Maybe the only negative data point would have been the decline in FX reserves in January. Although, to be fair, that was probably pretty much in line with what consensus was expecting.